So if I look, please listen. This external auditor now goes into a company, and usually they are part of a team. So can you see here, they call them the independent auditor. And he's independent, why? Because he does not work for the company, and he goes in objectively because he doesn't have any relationship with anybody inside the company, doesn't own shares in the company, nothing like that. He's independent, which makes him unbiased and objective. Okay. So they say here the board of directors appoints an independent firm of auditors. Okay. But who do they report to? Do they report to the board of directors? Who do they report to? They report to the shareholders. And very important, the shareholders will vote for them at the AGM. Yes, the board of directors can appoint them, but the board of directors does not decide, have the final say. The shareholders must first say yes, because they are going to report to the shareholders. Okay. Who pays them? The auditing company. But who pays the auditing company? The board of directors, the company itself. Okay. So, if they ask you who pays the external auditors, then you say the board of directors or the company. Okay? Because yes, it's not direct, it's through the auditing firm. But they just want to see that you know how it is split. They report to the shareholders, but the shareholders don't pay them. The company pays them. Okay? Now, this, I want you to highlight it in yellow, pink, grey, orange, all the colors that you have. This is the job of the external auditor. It's to express an opinion on the financial statements. He's just going to say, these statements are sharp, not sharp, totally not sharp. His job is not to go in to find fraud. Okay? You hear what I'm saying? If I mark your paper, do I mark to find mistakes? No, I mark to find the right thing. And by doing that, I might pick up on the things that isn't right. You see the difference? Okay. So, an auditor goes in, he checks. Remember, what is he checking? That the books is done according to the company law, IFRS, and GAAP. Okay? So he's going to check for those principles. Can he do every transaction the company has done? Can he check every single transaction? Of course not. It took them a year to do the transactions. He's there for maybe a week. He can't do that, so he does a spot check. Ne? And it's the same principle as moderation. Ne? Let's say we write a test. Ne? What do me and Mr. Q do? We swap our packs. Am I going to remark Mr. Q's packs? No. I'm going to draw 3 scripts from his packs, 10%. I'm going to remark those 3. If those 3, and he's going to do the same with my pack. If I do not disagree with how he marked, then I can assume that he's marked the rest as correct as well. Okay? If I do find that he marked something right that is wrong continuously, what am I going to do? Am I going to tell him he no longer teaches grade 12s? No. I'm going to go to him, I'm going to say, I do not agree with how you marked this. Please go through the pack and fix it. And he's going to do the same to me. I'm not going to lose my job about it. So, if an auditor goes in, ne, and he finds something there that is a little bit, he's going to report it. He's going to report it to who? Firstly, to his boss. His boss. He's going to go to his boss and he's going to say, sir, I found this in the books that makes me uncomfortable. should I continue with the audit? He makes the decision. Okay? So, he doesn't go to the shareholders because there's millions of them. Okay? How will he go to the shareholders? In the end, through his report. The shareholders in the end is going to get a report. And that is how he reports to them. Not face to face, but through a report. You get what I'm saying? Okay, so now he finds something that's bad. So now I'm going to teach you what happens is we get different types of audit reports. Okay? So now, let's say in our audit report we say, oh, there's something really bad going on in this company. Ne? Now the shareholders can decide to bring in what they call forensic auditors. What's a forensic auditor? Have you ever heard about that? So forensics is always people doing stuff to find crooks, ne? So forensic auditor is someone that goes in when fraud is suspected, and he goes and he finds how it was frauded. You get what I'm saying? So the external auditor goes in to see if everything's above board. If he suspects it isn't, he reports, in his report he will write something, he will report to his boss, and his report will say, I will not express an opinion. Then immediately we know there's something wrong. Then the shareholders can decide they want to do that. Can I quickly tell you something interesting about that? Let's go on. So, what is very important for you to know is how an audit report looks like. Now, if I look at an audit report, they've got a format that they use. Okay? So, if you look at this, this is actually such a beautiful summary that the district sent us. Please, do not forget about it, because this could get buried under all the different theory that you got. Don't forget about this. So if I look at this is how they report to the shareholders. See? So, first of all, they say, we are the independent auditors. This is a report to the shareholders. Can you see? We have examined the annual statement set out on pages 44 to 77. Now, why would they do that? Remember, I told you they're going to do a spot check. They're not going to do the full thing. Okay? So this is a spot check. And this shows there, what do we call it? There, what is the word? You see, I forgot. The test basis, the limitations of their role. This is that their role is limited. Okay, so they cannot say something about the vehicles, ne? Have an opinion about the vehicles if the scope that they were busy with were the cash and the debtors. Okay, so limited role that they have. These financial statements are the responsibility of who? The directors. Can you see? Our responsibility is to express an opinion. There they tell you what is their job description. Okay? The scope. We concluded our audit in according to what? IFRS, the ISA, International Standards of Auditing. These standards require that we plan and perform the audit to obtain reasonable assurance. Okay? Reasonable assurance. In the evenings when you go home, before you go to bed, you check that all the doors are locked. And then you go sleep. If someone comes in through the night and robs you blind, you can say to the police, you took reasonable precautions that it doesn't happen. Ne? You didn't leave the door wide open. Okay. You did the reasonable thing by closing and locking the door. You see? But it's still something bad happened even though you did that. And that's what they're saying. What they did is the reasonable thing. They did what their job asks. So if something else comes out now, that something is illegal or whatever, it's not because we didn't do our job. It's because those people were very good at hiding it. Okay. They say they did it on a test basis, meaning they didn't do all the transactions, they just did a little moderation. Okay. They assessed the accounting principles that was used. They evaluate the overall financial statements. Can I quickly say something? One of the jobs that is bursting at this stage into a very new job that is really a lot of people are going to do it one day is IT auditing. And that is where you go and you audit the systems on the computers. Okay. Just keep a mind open about that. It's the same principles, but it's here. Because it's very easy for people to commit fraud through algorithms. Okay. Now, the part that they will give you in an exam 9 out of 10 times is this. Now, can you see, first of all, they say, in our opinion. This is just their opinion. The financial statements fairly present in all material aspects. The moment they use the material, they say important to know. All the important aspects. What is important? That they followed IFRS and the company law. Ne? The financial position of the company and the results of the operations and cash flows for the year then ended in accordance with IFRS and the manner required by the Companies Act. So can you see, this is a very good report because they couldn't find, there was no mistakes, they didn't find mistakes or things that were unethical or anything like that. Okay, so this is a very good report. Now let's just quickly go through the report that you can see what each thing means. Can I ask that you don't talk? If you are tired, rather go home and listen to the recording. But don't sit here and make a noise so that others can't hear. Okay. So, the first thing, they talk about independent auditors. Can you see how this thing works? It tells you A, B. It's because they're referring to A, ne? So, independent auditors means auditors cannot be influenced by the company directors and not even the shareholders. The shareholders do not have access to the books. That's why the auditors goes in to do it for them. They cannot be biased. So if they ask you, what does it mean if they say they are independent? It means they are not biased. The report is to the shareholders. Why? Because they are the owners of the company. Okay. We have examined. This indicates their duty. What is their duty? Is they have to examine the transactions. This is one of the favorite questions they ask. What does it mean that they say pages 44 to 77? Please guys, don't write big sentences, and please don't tell me, and this is what 9 out of 10 people always say, so that the people looking at the financial statements knows where to find it. Okay, that's not why they say the pages. They say it states the limitations of their role, and for that you get 2 marks. The scope shows the norms and standards that they used. Reasonable insurance means that they didn't do every transaction. They did a little spot check. Okay? Material misstatements. misstatement. So material means important. Ne? I almost already said that. So if it's a misstatement that was made that was material, that was important for the shareholders to know, there's something in the statements that doesn't make sense. They have to show it. Okay. For instance, let's say, I'm going to do this little example with you. Let's say you go to Spar and you have to audit the farmer who gives all the meat, where they might buy all their meat. Now that farmer is a company, ne? And he makes millions and millions and millions. You can think. Okay, so now you go to the farmer, you are the auditor, you want to count the stock, you want to verify the stock. What is the stock of the farmer? The cows. Ne? So now, how are you going to count all the cows? Because there are millions and millions of cows on his farm. Are you going to go and count 1, 2, 3, 4? Oops, that one moved. Did I now count that one? You're not going to do that. So you're going to do an estimate. So you know what it is when they dip cows. Have you ever seen dipping? So dipping means they put poison on them so the flies and the fleas and the stuff die that bites them, so they don't get sick. So it's basically like a trough, ne? With where the cows run through. So how it works, it will look like this. There would be 2 gates, and there would be the place with the dip in it. It would be water with the dip in it. So now the cow would go in here, walk through the water, go out. Okay. So now what do? You time. You're not going to sit and count 1 million cows. What you're going to do is you're going to time how long does it take for a cow to go through there. And you see, okay, it takes 20 seconds. Ne? Now what are you going to do? You're going to say, okay, now they start. So you start your stopwatch. Now you go, you eat lunch, you do all your things. You come back. You stop your watch once the last cow goes through. You do a sum. Now you have a reasonable, ne? You have a reasonable idea how many cows it is. Now let's say you say it's 1,000,003 cows, but in the books it says it's 1,000,000 cows. Can you see it's not a material misstatement? Because in the scope of things, 3 cows is nothing. But if the book said 1,000,000 cows and you only counted 300,000, now it's a material thing. Can you see what they mean with that? Okay. Now, a test basis, again, it's the same thing. So a test basis is basically that pages that they give you. It tells you they are limited. Their opinion has limits to it because they have access to all the books, to all the information, but they do not have time to verify every single part of it. You see? Okay. So it's done on a test basis. It's done, I take a sample. The accounting principles that's used, I need to make sure that they use consistency. Ne? When they value their property, when they value their stock, depreciation is the one that you know at this stage. So if I say my vehicles is depreciated 10% a year on cost, I can't suddenly next year make it 10% on carry value. I have to be consistent. Okay. You never change it. If you change it, it's important to get, so you can change it with different vehicles. So if I sell the vehicle and I buy a new vehicle, I can change that. All my vehicles doesn't have to have the same method. For instance, I would value the car that the owner drives to meetings with. I would write off the car over a longer period than the truck that does all the deliveries. I would want to write it off quicker because it works more. So it doesn't mean because the one vehicle is this way, the other vehicle also has to be. They can be different. But if I decided for this vehicle, this is how it is. For that vehicle, till the vehicle dies, it's going to be the same. Okay. If I get another vehicle, then I can see, oh, that previous method didn't work, let's try it this way. Okay. But usually with vehicles, you get a standard how they do it. So your valuation of property, it's always historic value, né? Always at cost. Why don't you show it at market value? Because you haven't sold it yet. Okay. Stock valuation, we'll do that later in the year. Yes. So, the words, can you see again? Can you see how often they, no. Can you see how often they use this sentence? Limitations of their ability. Limitations of their role. Limitations, can you see they are limited in what they can do? Okay. So that's why they say it's just our opinion. It might not be like that, but I didn't go through everything. Fairly present just means they are not biased towards any group. Okay. Not all transactions can be tested. That's why it's based on only a certain amount. You go on, it says the state of affairs, the Companies Act, IFRS, you can go read through that. I did explain that to you. But now the thing that I want us to quickly look at is the different types of reports. There's 4. And you have to know their names. So what they will do in a test is they will literally give you an extract like that. For instance, if you turn the page, let's look here at question 4 on page 10. Can you see they give you an extract? Or if you look at page 7, they give you an extract. Okay? So they're going to give you an extract and you have to identify what type of report it is. So your best type of report is unqualified. It's the only good report. Okay. Now I know in our head unqualified sounds bad, but let me quickly ask you. If I say, Moshipiori, you are awesome. Would you like that? If I say you're awesome?
Yeah, but I want to say that because
No, okay. Oh, let's see. Moshipiori,
yes, ma'am.
you look so beautiful today. Would you like that? Yes. If I said, Moshipiori, yes, you look so beautiful today. Just quickly do this. There's some spinach in your teeth. Which is the better one? The first one. The unqualified one. Ne? Okay, not in the sense, okay, maybe not spinach. Let me say, you know, Moshipiori, you are beautiful today. It's, you know, it's just so sad about your ear that is weird. You know? That's when I qualify what I'm saying. Unqualified, I say you're beautiful. With all your flaws, you are beautiful. That's the best compliment you can give someone. I love you. I love you, but please, can you stop doing that irritating thing with your teeth? Can you see that is a qualified one? So, an unqualified report is the best report you can have. Okay? And remember when we read this one here, it says, in our opinion, it fairly presents in all respects, blah, blah, blah. Once you see that, you know this is unqualified. I didn't insert more words than the basic form. You see that? Now look at the bad reports. Now look at that first one. They call it modified reports or not good reports. Because in South Africa we don't use words that can make people feel bad. But this is a bad report. Okay, you don't want this. You get qualified. Okay? Qualified is when we see something wrong. So, how do I identify it? When they use the word except. You're beautiful, except for that weird ears. Ne? So, let me show you. It would look like this. They would say, in our opinion, blah, 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 fairly presents, except for da, 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 da. Then you know it's a qualified. Okay? It's something they can still fix. That would be, for instance, if they didn't show the director's fees separately, they show it with salaries. Then they would say, in our opinion, blah, 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 everything good, except we could not find any proof for director's fees because it was in the salaries. Okay. The next one is a disclaimer. Now, a disclaimer, just say, we are not going to express an opinion. That would be the one that you are talking about. I am doing this and I'm saying, there's something fishy, but I can't find any proof for it. But I got this gut feeling and the things does not line up. Then I say, I'm not going to express an opinion. And then the shareholders can decide if they're going to bring in the big guns. Okay? But that's a disclaimer. This is really bad. Because this means something is not right. Yes. No. No. They can just, maybe they can just ask another audit. They can ask another auditing firm to also come in and audit. Or they can ask, oh, since this is what you are feeling, maybe you should also audit this, this, and this. They can extend the normal audit as well. Okay, now, so that's a disclaimer. The third one is the worst one. It's the adverse. And the adverse doesn't think there's a problem, so I'm withholding myself from making the wrong opinion. I tell them they are not fairly presented. This is the worst one. And what happens if you get a bad report? People lose trust in the company. If people lose trust in the company, bad image, market price falls. Why? Because people are going to put their shares out to sell them. So there's going to be an overflow of supply, and nobody's going to want to buy it because of the bad reputation. So it's going to crash. Okay. So you're going to do the rest self-study. I just want to show you quickly the type of questions, because what I did is I did give you the activity. I didn't copy that for the people who didn't bring. You've got it at home. Okay. Because I'm not going to do it. I'm just going to show you. The memos are there as well. Okay. So they give you this audit opinion. So when you do, the first thing you do, please stop talking. First thing you do is you go read, and you see in our opinion, and you go look. Do you see anywhere the word except? No. So then I know this is unqualified. So they might ask you straight what kind of report this is. But most of the times they ask it indirectly, like they did here. Can you see here they say, state whether the shareholders should be happy with the audit report, give a reason. Should they be happy with this? Yes. What's your reason? It's unqualified. You see? Okay. Explain why the auditors found it necessary to stipulate the page number. Limited role. Can you see? Okay, you can go work through that. Let's look at this one. Here at number 3. On further investigation, it was discovered. Oh, where's the report? There's the report. Sorry. If you look at the report on the next page, Can you see here? Do you see the word except?
Yeah.
Can you see it says, in our opinion, it's fairly present, blah, 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 except. When you see that word except, it's qualified. Why is it qualified? For the marketing expense, we can't verify the documents. Meaning, there's an expense for marketing, but there's not documents that proves it. Okay? So, bad report. Okay? So, now, on further investigation, it was discovered that the marketing expenses was basically used for a holiday for the CEO and his family. Okay, so now they say, this covered their accommodation, blah, blah, blah. The CEO told the bookkeeper to debit marketing expenses. So he did what he was instructed. Okay, now, what do they say? The independent auditor feels, now who's the independent auditor? It's the external guy, ne? He feels he will not be doing his job properly if he agrees with the CEO's request. Okay? Briefly explain why he feels that way. Because this is unethical. Ne? He's using the company's money for personal use. There's no drawings in companies. Secondly, ne? He is asking the bookkeeper to ignore the IFRS principles. He is asking the bookkeeper to be unethical in doing the books. Okay? Can you see how many things is wrong with this? Okay. State 2 possible consequences for the auditor if he agrees to this. Now, you need to understand. Does he work for the company? Can the company fire him? Who can the company not appoint again? That auditing firm. Ne? They can appoint another auditing firm. What can happen to this single person who was now unethical as an external auditor? He can lose his license, ne? He can get a disciplinary from his auditing firm. He can get a disciplinary from SAICA. SAICA is the South African Institution for Chartered Accountants. This is it, SAICA. SAICA is like, SAICA is like when you're a lawyer, you get on the scroll. Ne? You're on the roll of lawyers. And if you're unethical, they can scrap you, meaning you may no longer act as a lawyer. You get that? Now, SAICA is that for CAs. So you can be scrapped and forbidden to act as an external auditor. So they're taking that word CA away from you. Can he lose his qualifications? No. If you wrote matric and you passed grade 12, can anybody take it away from you? You land in jail for life. Can they take away your qualifications? No. They can't take it away, but they can forbid you from practicing. So you can become a bookkeeper somewhere. You can still open your own business, but you can't operate as a chartered accountant. Okay. Let's look at this one. What time is it? Is it? Okay.
No. There's like 30 minutes left.
Okay. Let's quickly look. Audit opinion here. Fairly present. Do you see the word except? No. So this is unqualified. Can I tell you, last year they got a disclaimer somewhere and what is the last one? Adverse one. And those are the easiest ones to see. Ne? Can you see they give you extracts and they ask you things about? Okay.
Yeah.
You work through it on your own. I'm not going to do that.